Welcome, Investor Central's annual presentation. My name's Quinn Cowan, CFO and Director of the company, and I'd just like to share a couple of quick numbers with you before we get a few more guests up to talk. So our net profit after tax for 22 financial year was 8.8 million. This is up from 5.8 million last year. That is a mammoth effort from everybody at Finance One Investor Central Group, so yes. Our doubtful debt to revenue came in at 12.5% of revenue versus 14.4% last year. So we've come through that COVID sort of period and we've managed that very well. So we're very happy with that result. Now, every year we get, or half years, every 6 months, we get Darren Tam from Jessops to come and do the audit of our book. And I've got him here today and he's going to come up and give us a brief overview of that. So please welcome Darren Tam.
For those of you who don't know me, I'm Darren. I'm the auditor. Very simply put, there should be copies of this on the table. It's the annual report. I've done a brief survey of a number of people and no one's actually opened it and read it. If you did, I got my signature on the back page. Just so you know, that's my signature and that's why I'm up here, because I put a signature on a piece of paper. Quinn did the numbers fairly quickly. He likes me to also take less than 30 seconds, so I'll do this really quick. I'm an auditor, which means you want comfort from somebody that what they're giving you in this book is pretty right. The fancy words are not materially misstated. To do that, I need to understand the company, I need to understand the risks that are involved, and then I go and look at them and try and work out whether what they're putting forward and saying is what actually happened. The main areas that we focus on are where there is judgment or estimates involved. The loan portfolio is a big number. It's a lot bigger now than it was when I started working with Jamie and others at Investor Central about 5-6 years ago. So it's been growing consistently over the last 6 years. And my job is to make sure that when Jamie tells you there's $310 million worth in the loan portfolio, that's actually recoverable and that you can get your money back. And we spend a lot of time working our way through that to make sure that number stacks up. Because in my mind, that's the main risk for the investors in the room. You've lent money to, it's actually a really simple business model. Sorry, Jamie, to point this out, but it is very simple. He takes your money and he pays you interest on it and he gives it to other people who pay him a higher interest, and out of the difference he manages to keep the machine running. It's a very simple model. My job is to make sure that when he's lent that money out that they're able to at least repay those loans, simply put. And we're pretty happy with the numbers as they stand. Now that's the 30 seconds that I was allocated by Quinn. So I'm going to be sitting around. It's probably easier if you've got any questions and you want to talk about it, come up and talk to me. Please have a read. It makes me feel like I've done a job for some reason. So thank you for that. And I'll probably hand over to Jamie now, if I could, or back to Quinn.
I think Darren actually got a wolf whistle when he first came up. I don't know an auditor that's ever got a wolf whistle. It's a marked moment in time. I think it's on camera too, Darren, so it's wonderful. I was recently asked, why are you so successful? And I feel firmly that it's because we're a Townsville-based company, that our roots were started from a country-centric town. What we've developed is a team of leaders within our organisation, and those leaders apply a responsibility to each other, to their team members, and to the company. That responsibility then flows through to our obligation to investors. We value and appreciate your support. Every time that we catch up, it's a humbling experience to be a part of this organisation and this team. And we are truly grateful for the company that you've allowed us to be able to create on a national stage. We offer redeemable preference shares. That allows an investor to come into our company and to fund our lending businesses of Finance One Consumer and Finance One Commercial loans, along with our debt collection companies now of Strategic Collections and Commercial Credit Control. This is 25 years of lending and collecting money experience has gone into this business model. 13 years now since inception, from when we first borrowed money from our investors. And we've never missed a beat to our investors for an interest payment or a redemption when they've come to maturity. But the business has grown. Now we operate over 3 locations of Brisbane, Townsville, and now our collections company on the Gold Coast. And it's most important that we have the expertise to help grow those businesses. I'd like to welcome Nisha Pearce, who's joined our team. Nisha is our new General Counsel who's based in Brisbane. Thank you, Nisha, for joining the team. But for 2 years now, we've been looking for additional expertise. We've got 3 locations and people, and we want to take the DNA of our organisation that we've been able to create in Townsville and replicate that. We want to replicate it in Brisbane, replicate it in Gold Coast, and offer that superior level of customer experience to those great customers that support us on an ongoing period. So I've been looking for a CEO, and I'm very pleased to announce that today, Darren Cantor, he's here today, has recently joined our organisation as CEO of the group. We like Darren, went through a pretty rigorous process to be able to come to our organisation, but Darren started his career in collections. He knows collections very well, but also has extensive experience when it comes to lending. Darren also has a level of sophistication to be able to make sure that our company can grow with great governance across those 3 locations and meet the obligations to all our investors and all of those stakeholders. But Darren is a hard worker, and Darren's values are aligned with mine, and he would not be a part of this organisation if I didn't feel the same. I'm not going anywhere. This enables me to stay in Townsville as the Managing Director. I'm still working my backside off to make sure that we meet our obligations to our investors, and we're doing this to be able to continue our growth into the future. I'd like to welcome Darren just to the stage, just to say a few words about himself, if that's all right. Thank you, Darren.
Good afternoon, all. Well, firstly, thank you for having me. I've had the privilege of spending the last few days in Townsville, and I've got quite used to it, if I'm honest. Don't hold it against me. I do come from Sydney, so before you lynch me and start booing me on stage, I have seen the light. I am moving to Queensland, and I'm looking forward to actually calling myself a Queenslander. Can't bring myself to do the Broncos thing, so I'm a token Cowboy supporter now. I'm going to jump on the wagon there. All right, so my team, the Dragons, are pathetic, so I'm on board. So next year's our year. That's how I see it, right? So, look, well, Brisbane Lions are good too. I actually will support them, but I go for the Swans. And Joe, if you're in the room, he's still gloating with his victory over the Swans over the weekend. So, but look, I'd just like to, I suppose, start to say how privileged I am to be the CEO of a wonderful organisation. As Jamie said, he was looking for someone for a long time, which I feel honoured that, to be selected. And these decisions are big from my perspective. So, I have a family. We're moving to Brisbane, so not a big decision, one we don't take lightly. But I hope that demonstrates our commitment to this organisation because there's a lot to do. And some people have said that I've got big shoes to fill. I think that's one way to look at it, but with Jamie, I'm not trying to fill Jamie's shoes. Jamie's not going anywhere. It's complementing what he has done, add some more strength, and as we grow the business, Jamie can't be everywhere. He's a victim of his own success, and this organisation is a victim of all the people that have worked really, really hard, and I see my responsibility is to expand that and provide stability for this organisation. And our principal objective is to protect your money. Protect your money, make sure everyone's well looked after, generate a great place for people to work, and generate a nice profit that we talk about each year. A bit of my individual background. I come from finance, been in finance for 20 odd years. As Jamie said, started in collections. Often the forgotten part of the business, but frankly, the most important part. Getting money back in is critically important. So worked at Macquarie Bank for 7 or 8 years and then went into non-bank lending. So I've been on the banking side, I've been on the non-bank lending side. Why is that important? I think, well, fundamentally, we're a non-bank lender and it is different. It's different, and we're competing against some mainstream lenders who've got some advantages we have to work harder to get our customers. So having to understand non-bank lending is really, really important. As Jamie mentioned, we've got a collections business now. We're expanding the Gold Coast. It's a really good opportunity for us to diversify our revenue stream. Allows us to actually, through various economic cycles of, some of us might predict that there could be some challenging times. We're really well positioned to, if something happens with lending, we've got another arm of our business to keep stable and to keep producing some fantastic profits. So again, thank you for having me. Thank you for making me welcome. I hope to get around to speak to as many as I can today. And I'll pass you back to Jamie, who will conclude today's presentation. Thank you very much.
Darren's a good egg. Thank you, Darren, for joining our organisation, but also the trust that you've shown in us as a group to relocate your family. It means a lot to me, and I will not let you down. Thank you. So Finance One, our organisation. We are, as Darren said, a non-bank lender. We respectively write consumer and commercial loans across Australia now, providing an opportunity for customers who fall outside the mainstream lenders to access finance and improve their quality of life. Our main point of difference has always been, from our competitors, our great customer service, making sure that every day our customers are well looked after by our customer care team throughout the term of their loan. We have worked diligently to create a point of difference and a niche for Investor Central over the last 13 years, providing credit-worthy customers an opportunity to access finance where they may have previously been excluded. We do remain focused on disciplined growth. Ours is a long journey of what we're trying to create. We've structured the organisation with a securitisation platform now, which sits outside of the group to raise additional funds. Because as the business has grown, we need more money than can be delivered just from investors. So I'd like to talk about that today. We announced it last year. So today, over the period of time, we've raised capital from investors. Now we have an option to raise capital through a rated asset-backed securitisation platform. What does that mean? We've got an ability to carve off a pool of loans that is segmented from the business. Right? So it doesn't it's ring-fenced, it's called bankruptcy-proof. So they don't have a lien over Investor Central. Our investors still rank first in preference to be paid. But this has allowed us to access more capital at competitive rates so we can continue that growth. Again, it sits outside of the group. It's really important that we continue to raise capital from investors. You are an important part of our expansion. So we welcome you to refer anyone whom you feel may be interested in an investment in our company. We offer a high yield, reliable monthly return to our investors from 4.25 to 9% per annum. This gives our investors an opportunity to invest in a fixed income and a fixed return investment. Transparency has been the key to our success, with our investors fully understanding the business model that they're investing into. Darren mentioned before the collections industry. The collections industry, it does excite us with the opportunities that we lie ahead. As a lender, we've been asked to collect other people's money over the years, in the past. So now, with the collections businesses of commercial credit control and strategic collections, we can expand that footprint into the future for additional revenue streams that we didn't have before. So we've purchased strategic collections and commercial credit control to be able to do that. What that means is that commercial credit control has been in business since 1996. It has Optus and Vodafone accounts in Australia as a contingency collector. We're going to get really, really good at that industry sector. We've already got a reputation of excellence when it comes to collections as a lender, but this is an additional revenue stream that we can offer to larger corporations into the future. That's an exciting time, and Darren will help with that along with the broader team. We offer a fixed interest. It's paid monthly, providing a steady income stream to our investors. We've paid over $13 million, 13 years of returns. We've paid over $130 million since inception back to our investors since 2010. The company is led by a driven team of executives whom have consistently delivered increased profits and strong returns to our investors. All of the directors, they're investors also with their own capital invested into the business. Along with myself, I've got my own capital invested into the business. And I'm very pleased to say that over 40% of the Finance One team are investors also through a special employment prospectus. An investment in our company is free from any fees and charges to you, which does set us apart from many similar investments. Computershare is a share registry, issuing share certificates in the company, along with doing the monthly distributions back to our investors' nominated bank accounts. There are several bandwidths which an investor can invest with us from. $25,000 at 3 months attracts a 4.25% return, which is paid monthly. Right through to a 12-month term, it's at 5%, or a 60-month term at 7%. For larger amounts, from $250,000 to $500,000, we have terms from 12 months now at 5%, right through to 60 months at 8%. And for larger amounts, again, from $500,000 to $1.5 million, we have returns at 24 months at 8%, 30 months at 8.5%, or 36 months at 9%. An investor can have more than $1.5 million invested in our company. They just have different maturity dates that they're able to invest through. But this provides a steady income stream at a higher return than normal, so you can actually balance a lifestyle around that. How do we do this? At Finance One, our assessment process, it is personalised. When assessing an application, we will take the time to ask more questions than the average lender, so we can fully understand our client's personal financial situation and credit history. So it's up to us, whether it's a consumer loan or commercial loan, to delve into making sure somebody is creditworthy to get a loan with us. It is a unique attribute about Finance One. It's how we manage client relationships throughout the term of their loan. And we help them through the repayment process to give them every opportunity in the future to be able to manage that process. Compassion. It's an interesting word when it comes to collections, but it's about working with people. We're really proud. We give them every opportunity that we can to keep them on track, and this was shown during COVID. So we have flexible payment plans for people when they fall into distress. In saying that, we're not an easy target. So we will work with people to a certain point, and then obviously we've got a secured asset predominantly with a motor vehicle or a mobile plant and equipment, whether it's a commercial loan, and we'll go and recourse that vehicle. So there are times when people can experience difficulties for whatever reason, whether that's COVID-19 or even the inflationary event that we're going through now. So like COVID-19, we've got the flexibility, if somebody falls behind due to inflation, that we can work with them over a longer period of time. It's been a big year for us at Finance One. We did 27,400 applications processed for the year. So that was a record amount. That's a lot of loans that we processed. We settled, though, only out of those, 7,680. But we settled $192 million in loans. Since inception, we have financed over 15,900 cars, 400 motorcycles, 400 trailers, 271 trucks, 12,500 light commercial, that's including utes, vehicles, and 45 camper vans, 49 boats and jet skis, and 17 buses. And does anybody want a bus? Because we'd like to get to 18. If we looked at our consumer arrears, so during COVID, like I said, we worked with people over that COVID. So we saw our arrears grow, but it's been regressing, which is lovely. So we've seen a slight improvement again this year in our consumer arrears. So if we looked at 0 to 90 days, it's sitting at 86.6%, which is an improvement on last year. But if we looked at the commercial loan book from 0 to 90 days is sitting at 93%. Commercial loans have always been a better performer for us at Finance One. They were more affected during COVID, so we saw a higher rate of dishonours and working with a higher amount of customers, but it wasn't higher than the consumer book still. Even when those customers needed our support, we were there to support them, but it still, those arrears didn't grow past what the consumers were. So right from the get-go, commercial loans, we've been doing them for quite some time now, over 4 years, they've been a good performer. So we look forward to expanding that. We were always cautious with our growth, but expanding that into the future to be able to help more commercial clients into a book. It gives me great pleasure to talk about some of the highlights from our financial year that Darren Tam has encouraged you to read through the annual report. Our total revenue was up 34% from $56 million to over $76 million. Net profit before tax was up 53% from $8.3 million to $12.7 million. Net profit after tax was up 50% from $5.8 million to $8.8 million. And total equity, it has grown 27%. From $28.7 million to over $36 million in equity. Cash holdings as at the 30th of June were $58 million. Our loan book, it's increased from $230 million to over $321 million. That was an increase of 34%. Now that's pre-provision, so we take the provision for doubtful debts off that. Now, if we looked at that, though, that's quite a significant growth over the last 12 months. To put it in perspective, though, we did pause. We completely stopped our lending during COVID. Then we slowly started back, and that's why we're seeing that gap again. So you can see the discipline that we showed during COVID to stop lending. So at any time, we're not a company that's listed on the stock market. The share price is not our driver. Longevity in this industry sector and meeting our obligations is the driver. Through that, you can see that we plateaued, and then we reassessed, and then we went again. A recession is not the end of the world. A recession is a tightening of people's belts. A recession for us means that we need to manage clients' expectations through those events. We've paid over $27.8 million in interest to our investors last financial year. And as I mentioned before, we've paid over $133 million to our investors since 2010. I'm very, very proud of that. And the gap continues to grow between the size of our loan book and funds borrowed from investors through the reinvestment of profits on a monthly basis, and we continue to do that. This year, we'll be reinvesting over 75% of the net profits after tax back into the company. We have 17,600 active customers with a current loan, and the average loan size is $21,000 for a consumer loan or just over $35,000 for a commercial loan. So we're not talking big ticket items. We go up to $150,000, but that's the average loan size. What we've seen though in the last 12, that's since inception, what we've seen over the last 12 months is those loans are a little bit higher now because the costs have come in. So the costs have come in for those motor vehicles. So the motor vehicles that was $20,000 or $22,000 is now $23,000 or $23,500. So we're making sure that those customers, though, even though we're increasing that lend, making sure they've still got capacity to get a loan for those amounts. It's most important. We've expanded our network to now over 2,000 finance brokers that promote our range of products to be able to create that distribution channel. Risk management, it's a vital part of our business, and we manage this very carefully. As our loan book matures and grows, we budgeted last financial year on 17 to 19% of revenue to be written off. So, and Quinn alluded to that, is we've come down from 14% of revenue to just over 12% of revenue for our combined provision for doubtful debts and write-off. Moving forward though, again, moving into an unusual inflationary event, we're still going to budget on that 17 to 19% moving forward. We've also got a provision for doubtful debts of over $15 million. We believe that's a cautious view of how we manage our loan book. Additionally to that, we look at our write-off tolerance levels each year. This helps demonstrate the strengths of our business model. So the next graph shows what we're owed in principal and interest from our customers over the next 6 years to what we're owed back to our investors after cash holdings are returned to them. So we're looking at a difference of $476 million to $265 million. So that's a difference of over $211 million. from what we're owed by our customers to what we owe our investors in principle. If we take off our historical provision for doubtful debts of 3.2%, this still leaves us with a balance of $460 million. If we had to stress test the business model and we take off a write-off of 7%, we would still be left with $443 million, or if we extrapolate that to a full 25%, we're still owed over $350 million. We continue to build a substantial margin of safety back into the business model. Ladies and gentlemen, your support is important to us, and we welcome you to refer anyone whom you feel may be interested in an investment in our company. We value your support, we appreciate it, and our investors are attracted to us as we offer a high yield, reliable monthly return from 4.25% per annum up to 9%. It's most important for us that transparency for our business model is vital. We want you to understand the business that you're investing in. I'm happy to answer any questions that you may have. Yes.
Apart from us, the normal investors.
Sure. So the question was, can we explain the securitisation platform and what that means? That was the question? Yeah. And so we've got access to investors, retail sophisticated investors. What we want access is when we want to raise $70 million at a time to fund the loan book moving forward, we need that flexibility. Now that comes from institutional investors. Those institutional investors want an asset-backed, rated. So we went away and got a rating from Moody's over a pool of loans. So it's rated and it's asset-backed. Now, what we do though with that is create a flexibility, because the investors have been a mainstay of our business and we wanted to protect them. So we've always had our investors first ranking above ordinary shareholders. That was most important to us. So this allows us to have a ring-fenced, asset-backed security for other institutional investors. So we carve off a set of loans, and then those investors will invest through that. But how we've done it, a little bit unique. We've always done things a little bit different. We don't take the $70 million straight away. We take the capital that we require, and then we can draw down on that as required. So we still own those notes until we transfer them over. What that means for investors, though, is we then reallocate that capital to new loans that come into the pool. It's securitised over the entire business to protect those. So we've still kept the heart and soul of that, what made us true to our investors. Does that explain it? Now it's bankruptcy proof. So in regards to, they don't have a lien over Investor Central. So we as a service provider still service those loans for them as well. So it's like a separate pool of loans. Thank you. Any other questions? Thank you for your continued support. Yes.
Is there a plan in place to bring yours up to match it later on?
Yeah, so the question was, we're in a rising interest rate environment. The banks, they've lifted slowly some of their rates, and so it's no different for us. We need to remain competitive. So through our prospectus, we have a flexibility to be able to increase or decrease our rates as required. So we've come off the last 10 years of a decreasing rate environment. Now, when we first started, our business model revolved around paying our investors a return of anywhere between 14 to 18%. So it was quite a large return. Now, the business has matured since that time. We've been able to access cheaper funding and be able to help more people across the board. And we can also help people with more competitive rates out there, because our rates got down to one stage, 2.75% right through to 8%. Now, recently, we've increased those rates to 4.25 to 9%, and we'll continue to assess that in that increasing rate environment. So that way, we still need to be attractive to all our investors. We don't want to lose it. We've spent the last 13 years developing relationships with our investors. They're a mainstay of our business, and we want to continue that relationship. We don't want to walk away from that. You are all important to us, and we need to make sure that we have competitive rates that keep you attracted to our company. Does that answer that question? Any other questions? thank you for making the time to come and join us today. Tea, coffee and dessert will be served shortly. I do understand that some of you may have to go because of work commitments, but thank you and we value your support. Thank you very much.